This is going to be a really exciting episode, not just because I'm back out of the hospital, had COVID, but there are some really awesome things happening in the charts. This is an extremely exciting moment for Bitcoin and Bitcoin's prowess here. This is really cool. So in this episode, what we're going to do here is I'm going to show you what's happening that's awesome for Bitcoin, flexing its muscles versus traditional markets, what's awesome, flexing its muscles versus other cryptos, and third, something specific that I missed that made me a little bit more bearish than what I should have been. And I want to go over those three things. So I should leave tags so you can go back and forth and connect those dots if you go through this video a little too fast. And so use the tags down below as well if you want to review this. So before we get started, go ahead and check out that sign. That's a really neat sign. It says hit like and poop and subscribe. If you can see the little poop thing in there. But anyway, take a quick second, returning viewers, hit like for me. Leave me a quick comment down below. Even if it's you suck, LOL, LOL, you suck, or you suck, you actually suck. Let's get it. Let's get this crypto. So, and if you are new, here's what my channel does for you. Simply put, you're mostly watching crypto YouTube videos that talk about project fundamentals and news. So what my channel does for you new viewers is I connect that last trifecta dot in that triangle of what you need within your crypto journey, so you have a statistical understanding of what the heck you're doing when you click around with your money. So I help convert buyers and prayers into profit pimps. So if that sounds good, let's get after it. I'm going to turn off that sign. And new viewers, if you like what you see by the end of the video, go ahead and subscribe, hit that bell so you can stay in the know. So you can click around with a little bit more confidence. And again, pardon me, I am still recovering from a COVID Delta variant, but so go ahead and hit that bell so you can stay in the know and help yourself become a profit pimp and get out of the buying and praying habit. All right, so here we go. Here, let's start off with what I missed. I missed this. This is the CME chart. So my whole big deal with normal chart. So let's flip to the normal chart. Right there, see it a little better. This right here, we zoom in. This scared me. These closures below the daily 200. So my daily 200 EMA is the orange line, okay? 200 EMA of the daily chart. And let me take off the 89, which is purple. This squeeze right here with the red approaching yellow, if that had crossed, that would have been very, very bad. And it likely would have sent price tumbling. Usually what sends price tumbling on Bitcoin, Doge, anything. And I played this on Doge and it went down 50%. And I did that in a live call before it happened. A whole YouTube live call, not just a Patreon, Discord live call, but and it did send it plunging 50% and hit my target. So this is a very bad cross that happened on spot price action, right? Where exchanges are trading spot price Bitcoin. However, look, this did not happen. Look what happened on the CME chart. It didn't cross. It skimmed it. And look what happened if I take off the 80. So that's the 89 EMA, put back on the 200. Price did not close below it. It didn't even close at it. I totally missed this. So that is my fault. I was a little bit more bearish than probably what I should have been. So this in and of itself is pretty powerful. Now, because if you get this base here and you start closing above the daily 10 EMA, which is the red line, this could get some massive continuation. Another thing, if I can stay on the CME chart, is most of you know my basic rule of thumb. So I'm on the weekly chart. You're seeing the red line, which is the weekly 10. After price has a drop down to it, so this is the first drop down to the weekly 10, I like to have 3 minimum, but 4 is better. My rule of 3 to 4 candle closures at or above the 10 EMA after this one. So this one doesn't count. Look, 1, 2, 3. So I typically like to see a fourth if one closes below, but the next one came right above. That pretty much satisfies my rule. It's the low end of my rule, right? But on the CME chart, it happened. So the idea that this can get some pretty serious continuation is absolutely there. It is there, folks. I mean, this could get some pretty massive continuation. However, what I would prefer to see, though, is I would like to see next week come down, tag it, come back up, maybe close green. That would make me feel extremely good, and I would probably start looking for some long positions if that were to happen. And if that doesn't happen, I might tread very lightly into being a little long with very, very, very light leverage, maybe 2-3 times in my futures account, which is not a large portion of my crypto portfolio. A lot of my crypto portfolio is in staking and spot price action and hodling. I'm hodling Dash, for example. Dash is like my Bitcoin for a lot of you who maybe already know that. So this looks like it could get continuation. So this might be off. This could be off to the races. Now, what do we need to see in order to be have a statistical edge that this will be off to the races and we won't get another fake out like this? All right, so let me show you. Let me go to my chart with the range on it. This is our current range. And remember, in one of my maybe 4 Bitcoin videos ago, I said very specifically, my favorite, by far my favorite possibility here, so taking off the range, my favorite possibility is after I made a video after this spike and had this rally here, I said, I think that price will come within about 500 to $1,000 of this wick low, which it did. And I said, I would like for things to come back right into the range. So, but I said, I think that's the least likely among these other 2 targets, right? Even though it didn't hit my box, it still came within about $800,000 from that wick low. And I said, that's what I'm hoping for. And guess what happened? I got my hope. Came down, went right back into the range. All right, now, when do we get a statistical advantage that this is not going to fake out? Well, as of now, what could end up happening is you get a test of this, a wick above, daily closure, come back down, test one of these lines, even down here to 44.6. That's perfectly fine. Perfectly fine. I would actually love to see this because that would retest the weekly 21 EMA, come back and close above the weekly 10 EMA. See this red dot dash line? So even though I'm on the daily chart, you can see the weekly EMAs on here, right? And the 4-hour 200 EMA is about right here, where I have that written here. Okay, so next week, if you could see price come back down, test this, and start charging up, that would be one clue to know that this is not going to be a fake out and continuation will happen. Or a more bullish case could be if I would like to see a 2-day closure above this line. So let's go to the 2-day chart, because I feel that market makers are, creating more fake outs on the 1-day chart and the 4-hour chart. So using the 2-day chart can give you a statistical advantage over, fake outs. So if a 2-day closure above 50,585 could happen, I would say that this type of fake out would not happen again. That would be my guess, even though you did get a 2-day closure once, but it hadn't filled out this range. And now we've come below, come back in. That would be my signal to say, hey, we're probably going to be racing up towards the 60s here or the high 50s. So that would be my cue. Another cue that I would like to see here is the 5-day chart. Look what's happening here. I'm going to go to the Stokes of the 5-day. I can stop clicking around here. Look, this is actually really bullish, folks. So this is the 5-day Stokes coming down and rejecting entering the neutral control zone, and it's heading back up to the bullish control zone. This is solid movement right here. So if you can see that Stokes on the 5-day stays angled up and gets back above here, see this zone here gets back into the black zone, that's when the bigger moves really start cooking. All right, and let's go to a cleaner chart here and look at the 2-day. And I'm going to use the 10 EMA only of the 2-day chart. Check this out. So usually when you get Stokes on the 2-day to come back up and so when you see Stokes on the 2-day hit the bottom line, come back up, and that's one condition. But the second condition is you close above the 10 EMA. Look what happens historically. Watch this. So only 2 conditions on the, let me get rid of RSI. I don't need it right now. So only 2 conditions needed, and it usually gets continuation. Watch this. So you have Stokes hit the bottom, start curling back up on the 2-day chart, and the second condition, you closed above the 2-day 10 EMA, which is the red line. Now let's go back in time and take a look. You have Stokes down, they start curling up. You can't stay above. You did get a closure, but then it came immediately back down, which hasn't happened because we're on our 3rd candle now above the 10. Okay, so this all kind of tanked after a couple closures here. But This one right here, it closed above, stayed above, and the 2-day Stokes were curling up as you got closures. You got pretty solid continuation move. Okay, so let's keep back testing this. Stokes didn't come all the way down. Let's go all the way down. So right here, Stokes came all the way down, right there. If you can see that under my, yeah, there we go, under my cursor. Okay, you couldn't close above, came back down and test. Couldn't close above, couldn't close above. Once you closed above, had a second closure, Stokes were still angled up. You got a massive move up, and that took price all the way up to 40K. So these types of the two situations there can often lead to some pretty strong continuation. Sometimes it doesn't get that big of a move, but Stokes came all the way down. Price couldn't stay above. Finally, you had 2 closures above as Stokes 2-day Stokes curled up. You got a large move up. And this is what's happening right now. So Stokes on the 2-day chart, way down here, curled up, couldn't stay above. Once it did stay above, Stokes were still up. You got a large move to the upside. So the 2-day Stokes are saying, it looks like you already have a decent statistical advantage that this will keep going. But to add to that statistical advantage, I would say that on spot price, if you can get a couple day closures or two-day closures above 50,585, you might be off to the races. Now, where would price go from there? I would say price would come up to this zone between 60,000 and 57,680, and potentially come back down, test the height of this range, consolidate here, then bust out, make all-time highs, and it could be early November that this happens. So I would be looking for all-time highs by early November, if not in October. It looks like my mouse just, there we go, my mouse stopped working for a second here. So that's what I'm looking for. Now, those are the things I missed. These are the bullish things within the chart itself, but I still haven't showed you what's happening versus traditional markets. So I've been postulating that the way that Bitcoin correlates with traditional markets will be broken. I've been saying this for a while. A lot of people ask me, yeah, but what about traditional markets? They're going to tank. And my response to that on YouTube, like comments or even just saying on video, is I think Bitcoin at first, if this starts tanking, will follow it for a little bit, but then it will break its correlation, which hasn't really correlated that strongly with traditional markets recently anyway. But I said, I think the correlation will be ended because fiat as a dirty word, I think that's starting to catch steam across the US for big money and all that stuff. And I kept saying, I think after a while, people are going to realize that Bitcoin is that hedge, and we're going to see it. Look what's happening here. Look at this. SPY down. It's starting to tank here. It's starting to really accelerate to the downside now, right? You have Bitcoin up 2.35%. And look what other big caps are doing. Look, Ethereum. So it was down just a minute ago. It was in the negative for the day, but Ethereum not moving. Cardano is down. And Bitcoin is taking the glory here. This is awesome. This is Bitcoin flexing its muscles and saying, I am the hedge, yo. I am the hedge. So this is looking good. Now, could this be a fake out still? It could be. But in the beginning of the video, I already let you know the things to look out for that would give you a statistical edge that this is not. So we're not quite out of the woods yet. However, there's a lot of good stuff happening right now, folks. A lot of good stuff happening. So let's take a look at Cardano. Cardano is still below its 2-day 10 EMA. It's at its daily 10 EMA and coming down with a fresh Stokes crossing down. So it looks like money, big money, is flowing into Bitcoin first, which is typically pretty common after lower consolidation, some scary moves. Bigger money flows into Bitcoin first. This is awesome. This is what we need. All right, to have a good continuation of a bull market. You want to see Bitcoin dominance doing really well first, and then for Bitcoin dominance to fall because altcoins are doing so well. So Bitcoin dominance is over its daily 10 EMA. Is it over its 2-day? It's over its 2-day. So I would imagine this could easily come up to the 45 range or so. I would say this easily comes to the 45 right here before altcoins start taking off. The general altcoin market, right about there, about 44, 8, 45 or so. So I would like to see this hit, and then I think altcoins, people might start dumping into altcoins, and then Bitcoin dominance might be hurting a little bit, but Bitcoin would still be going up in price at that point. I think the whole market could start raging, because when the whole market rages, there's less liquidity, or the order books are thinner. So when people hit market buy on smaller coins smaller than Bitcoin, it moves the price higher. Therefore, Bitcoin dominance suffers, even though Bitcoin price is doing just fine. All right, now let's take a look at Bitcoin on the weekly here one more time on CMEs. So so if you can get, and this is kind of like your final frontier of, we're probably not going to have a fake out. If any week can close above on CMEs, on the CME chart, above this line at 51,880, continuation is extremely statistically likely to happen. You just need a weekly closure. You want a smaller time frame, 5-day. Well, the 5-day, as long as it closes above here, right there, I think that would give you a strong statistical advantage, more than 50% that continuation is going to happen. So in 2 days, on Sunday night, New York City time at 8 p.m., if the 5-day chart can close above here, I think you have a statistical advantage over 50% that this is going to get continuation to the upside, and we're not going to come back down and test 40 or anything lower. If a week, so go back to the weekly chart, can close above this line that I already mentioned at 51,800 or so, I think your statistical chances are much higher than 50% that this gets continuation to the upside. So if you're holding Tether right now, it's going to be up to you to decide when to deploy that. However, it's still, you don't have to deploy Tether during dips, right? Okay, so let me show you this. Let me show you why it's not that important to only deploy Tether during dips. Watch this. If you wait, so for example, this before Bitcoin blasted from about 10K-ish to 40K, look what happened. You got a weekly closure above the top of that range, and then it just kept going. So deploying Tether after this closure, even though you didn't buy a dip, you still were in the safe, and things were up from there. Your investments were safe in this case, right? Statistically safer. So you don't have to wait to deploy Tether for dips. It's actually statistically more likely to wait for a breakout to deploy it. So don't feel bad if you're holding Tether because you're waiting for a dip. You can, so let's look how this structure, right? See that? How it closed above this structure here? Well, we have the same thing going on. Watch. As long as we get a closure above here, deploying Tether at that time after the week closes above. Will this week close above? I don't know. But if you would, if people, not you, but me, for example, even though I've already deployed my Tether, but if I personally, not financial advice, I'm not a financial advisor. This is Pokemon cards for Bitcoin only. But once you get a week close above here, deploying Tether at that time after the closure and the new candle starts would be statistically a pretty safe time to deploy that. Again, I want to reiterate, not financial advice. You don't have to wait for dips to deploy Tether, even though that sounds sexy, makes you drool and all that stuff. It's actually safer to do it during breakouts on Bitcoin. So that's what I got for you here today. And if you liked what you saw, new viewers, go ahead and hit subscribe, hit that bell so you can stay in the know. And returning viewers, if you haven't taken a moment to hit like for me so I can continue making videos for you, and leave me a quick comment down below, even if it's just a emoji thumbs up, that's fine. Helps the algo, and we'll see you next time.